There's been a major shift in the culture in Austin, and this shift has caused a major revolution in the real estate market.
Yes, we all know Austin has a shortage of housing that's affordable, but a new report is showing just how bad the situation is.
A household would have to have an annual income of more than $149,000 to afford a mortgage here in Austin.
To understand how we got here, we have to go way back in time, before the boom even ever started.
In the 1980s, Austin was known for its nightlife and music. South by Southwest launched in 1987, and by 1991, the city had adopted the nickname the live music capital of the world.
Back in those days, Austin was a mecca for independent artists. It attracted creative types from all over the world, and they created a culture
that was vibrant, innovative, and a little weird. Since then, there have been a lot of changes in Austin. In fact, in just the last 10 years, there have been so much growth and development in Austin that it is now not only one of the largest cities in the country, but it is also one of the most expensive places to live. Let's take a look at how all this happened. When a new neighborhood is first built, the overall layout is planned and developed by a single builder. And one of the primary goals is to maintain a certain cohesiveness. There might be other builders in the community. There will likely be different sized houses. And even though the homes won't be identical, there will be a lot of similarities.
The best example of this is an HOA architectural review. Now, you may not like the idea of somebody having the power to tell you what you can and can't do with your own house, but the value of your house is very much tied to the appearance and condition of all the other houses in the neighborhood.
Emilio Rodriguez bought his house in November and painted it pink. People in the neighborhood aren't exactly thrilled about the new color scheme. Neighbors are complaining about the property values going down and that your home's affecting their property values. What do you think about that?
Something like this can only happen when there's no HOA, but sometimes the impact can be positive.
In those older neighborhoods closer to downtown Austin, there is no HOA and no design restrictions. In those types of neighborhoods, you might find houses on the same street that look like this or like this. Clearly, the newer, bigger house is worth more, but what would that value look like in the future if most of the other houses on the same street were never developed? On the other side of that older house will see an uptick in value after the new house is built in the neighborhood, but no one is going to confuse those two houses as being comparable when estimating values. If you go back to the early 2000s, East Austin was a rough part of town nobody wanted to go into, and Rainey Street was a designated historical area with residential homes built in the 1930s.
The city of Austin raised the height restrictions on Rainey Street, and that not only negated the idea of preserving the historical buildings, but it encouraged the condo development.
The Malaga was one of the first ones built here. It was completed in 2005, and since then, the buildings have gotten taller, the population denser, and the condo prices have skyrocketed. And of course, the people moving here were not the same creative types who defined Austin in the 90s.
These new residents are more affluent, and more than likely they worked in the tech industry.
Across I-35 in East Austin, the development was different because it was primarily driven by speculators and flippers. Somebody figured out that East Austin was walking distance to downtown, houses were cheap, and if you spent a little money refreshing one of those old houses, someone would buy the remodeled house for substantially more than it cost to fix it up. The next step in the area's transformation was when speculators figured out that if they tore down the old house and spent a couple $100,000 building a new one, whether it was a single home or an AB condo regime, if they did that, their profit margins could be in the six figures.
Now, what's most interesting about all this is that in every other city where this type of gentrification happens, it's usually confined to a much smaller geographic area. Here in Austin, it happened all over the east side.
It also happened north from Hyde Park to Crestview and Allendale. It also happened south from Bolden Creek to South Lamar, South Manchac, and beyond. It even happened to the west, which already had some of the most expensive real estate in the area, especially as you move closer to Lake Austin.
And it's also important to note that this was never planned on a large scale like a master plan community, where you have that cohesiveness like we talked about earlier.
All these houses were remodeled or built by individual investors, which means they built whatever they wanted, they priced the homes for whatever they wanted, and if they couldn't sell the house for what they thought it was worth, they could hold on to it for as long as they could continue to pay the property taxes.
This is a good business to be in prior to the pandemic, but it was a great business to be in during the boom.
It seemed like there was an endless flow of affluent homebuyers ready to buy anything in Austin.
Consider this. If you could make a profit if you sold a remodeled house for $800,000, what would you think if someone offered you $1.2 million because they had this fear of missing out? Now, as you might be aware, that boom is over. Interest rates are higher, and buyer demand for these types of houses is shrinking. Now, don't get me wrong, there are plenty of people in Austin who can afford to spend several $1,000,000 for a house. But is it realistic to think that everybody who's moving here can afford these types of homes.
Not to mention that those types of buyers also have the option of buying a bigger, newer home in the suburbs. And those types of homes will be in a master plan community with that overall cohesiveness that we talked about earlier. So there'll be much less risk of the value decreasing because of the appearance and condition of the other homes in the neighborhood.
I think it's safe to say that Austin's reached a period where it needs to redefine itself. It was only a few years ago that everyone expected Austin to become a major tech city. There's still a tech presence, but many of the big players are pulling out. You might still hear the nickname live music capital of the world, but it's going to be very difficult to hold on to that nickname if the artists and musicians can't even afford to live here.
Which of course brings up the topic of housing.
All of that investor-driven, one house at a time neighborhood transformation has been going on within a 10-mile radius of downtown Austin over the last several years, has slowed down quite a bit.
And many of the more expensive homes that have been built in those older neighborhoods are sitting unsold for long periods of time. If you own one of those houses, you are certainly expecting the rest of the neighborhood will eventually be developed. But if preferences have changed and no one is buying those houses anymore, there won't be much motivation for investors to keep doing it.
What are your thoughts on where Austin is headed? Do you think it's possible for the city to rediscover some of the qualities that made it special in the first place? Or has the culture shift and the real estate development gone too far and all of this is irreversible? Share your thoughts in the comments below. And don't forget to subscribe to my channel and ring the bell. That way I'll get a notification every time I post a new video.